Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's November 9th. This will be our chart lesson for today. And this is Thursday, so that's no chart lessons on Fridays. Most of you know that, but we're always picking up new people, and so rather than just have people ask me what happened to the chart lesson on Friday, I always like to repeat it. So I apologize for repeating it over and over, but I'll probably repeat it every Thursday and every week. So just saves me from having to answer a lot of emails or other messages. But anyway, this is going to wrap up our week. Um, so we won't be back till next week. I wanted to, before I start on the chart lesson, I wanted to just have a slight follow up from my long conversation soapbox yesterday. Um, I got an email from another trader who had asked me this question long ago, and I'd sent them. I think this was actually in the old forum, and he gave me a link to it. But when I go to that link, it's gone. So I guess this was lost. One of the portions that was lost in the old forum. So I've reposted it in the forum. So anybody that's a member of our private forum, you can read that. But I'm going to read it to you here because when I read this, I thought, man, this is gold. And I not try to toot my own horn, but this is something I wrote to somebody way back. And but I think it's very pertinent to what we talked about yesterday. And so I'm just going to read it, and hopefully it'll be helpful and add to what we talked about yesterday. But basically, this trader had asked me in the forum about bar by bar movement and going over that closer. Can I do more on that? And this was my response. It was actually a two-part response. I think I came back and added to it after I thought about it a little more. And that's the part that I didn't really talk about yesterday. So I'm going to read both parts. It's pretty quick, so it shouldn't take too long. But here we are. It says part one. It doesn't hurt to have that kind of understanding of bar by bar movement, but I never think that deeply about it. I just look at the big picture first to determine the bias. Is it up? Is it down? Is it sideways? And then I draw my support and resistance lines, which includes trend lines. Trend lines are nothing more than slanted support and resistance lines, and we talked about that yesterday. I go on to say prices will normally undulate back and forth between the current and most obvious support resistance lines. This might be a range or a channel, but that's what prices do, and that is exactly what prices do. They just go back and forth. They come off the trend line and they go to the either the midline or the other side of the trend. What we call this other side of the trend line, the trend channel line. And so they just go back and forth. That's what prices do. And so we're always looking, once they come off the lows, where we expect them to go? Back to the highs. That's exactly what happened here. And they got to the highs, and what happened? They turned down instantly as soon as they touched it. So this is where we'd look for a setup if this was a 2,000 tick intraday chart. But let me continue. Once you understand that this is what prices do, you start to know what to expect from prices. Again, we have a set of rules that help you to understand, because prices don't move with common sense. Um, so we have a set of rules that help you with that. But to continue here, if prices just bounced off the lows of a range, then I will expect them to go to the highs of the range, and I will wait for prices to reach that level, then look for a setup we teach. If prices are in a channel, I will wait for them to turn off the trend channel line, or it could be the midline and work back to the trend line. Once prices are back at that trend line, I start looking for the setups we teach. With time and experience, you will do all of this subconsciously with very little thought. I mean, I don't look at these bars. I don't give a hoot about what a bar is until it gets to where I'm looking. And so and I never think about it. I do all of this. It's like learning to drive a car. When you first get in a car, you're thinking about every minute. Okay, buckle my seatbelt, put my foot on the brake, put the car in reverse, look both ways behind me, look in my mirror, look to the right, look to the left, and you back up and you're still not confident in what you're doing. But after you've been driving for 20 years, you get in the car, you throw the keys in, and you're backing out and you haven't thought about any of that, but you're doing it all subconsciously. Well, trading's the same way. Once you do all this every day for a while, you'll start doing all this stuff subconsciously, and you don't feel like you're doing anything but just watching the chart. So to continue here, early on you will overthink and overanalyze. but that's because you won't really know what you are looking for yet. Don't overthink things. Just keep it simple. The key entry points is where most of the important action will happen. Study your charts and watch where most of the large moves originate. It will most always be at a key entry point. Context is king and the patterns are secondary, and just set up the timing of our entries. If you concentrate so closely on every bar, you will miss the forest because of the trees. So that old saying where you're missing the beauty of the forest because you're just looking at individual trees. And it's the same thing. If you're just looking at the bars, if you're concentrating that closely on the bars as they're printing, then you're missing the context of the big picture of the chart. And that's what really matters. Where prices are at, what they're doing, not the bars. And so then I came back and added this part 2. And I went on to say, I might add that once prices get back to a key entry point where I'm expecting something to happen, that is when I might look closer at the smaller details. Those details won't be as deep as what you were looking at if you're looking at them bar to bar. And I won't really think too much at all because I have it ingrained by now and is mostly done subconsciously. We just talked about that. Things I will look for are as follows. I'll look, is there congestion or no congestion? That's important. 2 legs or 1? Was there a counter trend channel? Has it played out? If not, should I expect it to play out? Or is the main key entry point too strong or dominant to overcome? Those are all things I'm looking at and just subconsciously. Most importantly, where do I expect prices to attempt to go next based on the overall context of the chart? Basically, I'm looking for the pattern and considering these other things all at one time subconsciously. Excuse me. No pattern, no trade, no signal bar, no trade. Any questions about the items I listed? No trade. Everything must line up and look to be a high probability trade. And that's the most important thing. And that's the difference between an amateur and a professional. Amateurs are looking for an entry on every single swing here. I'm looking for an entry off these key entry points. And I'm waiting on the setup. And if I don't get a perfect setup, I'm waiting, and it might be another hour before I might wait 2 hours. But I'm not taking a trade if it doesn't set up properly. I don't try to sneak in. I don't try to force a trade. I don't try to get in early. The fear of missing a trade will make people sneak in early and then they make a mistake. Don't do that. Wait for the perfect setup, and if you don't get it, just keep waiting. That's the difference between success and failure, really. It's really that thin of a line. Once you learn to figure out, to see all this stuff after the fact, the rest of it is just starting to see it in real time, and then just being disciplined and patient. And most people are not, or neither. You know, most people want to trade. I can't tell you how many times I get an email from somebody saying, you know, what is there something else I'm missing? I'd like to add one more trade to my repertoire or to my scabbard. You know, they want to take more trades. If you're doing this for the thrill of trading, just trade. Don't worry about it. Just take them all and have fun and enjoy it. Just make sure you're doing it on the simulator. But if you're doing this to make money, you only want to take 2 or 3 of the best trades every day, the sure thing. So you don't need any extra trades. There's always going to be at least 2 or 3 sure trades every day. Every once in a blue moon, there might be a really difficult day where you don't get very many setups, but I point out 7 or 8 to 10 trades every single day, just about. There's always at least 2 or 3. I mean, even on a slow day, there's probably 4 or 5 to 6 or 7. So there's always plenty of trades. And a lot of times there's some green ones that are right on the border that could add a few more, but you're better off to skip them because you want to take 100% sure things. And that's the difference really between, I mean, all this bar by bar is just, it's really not that important. And I'm not trying to harp on that. So whoever's asked me that, don't feel like I'm, you know, beating up on you or trying to point you out or anything like that, because I don't mean it that way. I'm just trying to tell you that many, I mean, and the reason I put this video out, I mean, I talked about that on the videos because there's a lot of people doing that. It's not just 1 or 2 people, it's a lot of people. And so it's just not that important. The only time that bar gets important is when you're looking at the signal bar, and that's it. prior to that, it's I could care less what these bars look like on the way down or on the way up. It's when they get to where I want to trade or where I expect to set up. That's when I care what the bars look like. So draw your key entry points. Learn to find these points. Draw them. Pay attention to them. Trade them. Look where every big move occurred right here, down. Where did this big move happen? Key entry point. It's early though, so it's hard to find that one. We come back here. Well, it got confirmed right here on a perfect second entry. And look at that move. Where did it happen? The key entry point. KEP, key entry point. Let's see what happens when it comes back here. If this trend's going to continue, we'll get another big move down. If not, it'll fail in there somewhere and probably reverse, give us a break. This is a daily chart, so it'll take a lot longer to follow through. But I could show you this on any level chart. And if I took the headings and the titles off, you wouldn't know if it was a 2,000 tick chart or a daily chart or a 5-hour chart. You might know if it was time chart versus a tick chart. But past that, you couldn't tell them apart. They will all look just as alike. And you can't tell whether one's a daily chart or one's a 2,000 tick chart or one's a 5,000 tick chart. They will all look the same as long as there's no headings or titles on them. So keep that in mind. But anyway, let's get to the chart lesson. Here's our daily chart. You can see we turned down today. Where did we turn down? Right at the key entry point. This key entry point's already been confirmed right here. And look at that move. That was the move. If you were trading a daily chart, if you'd have sold an option up here, or I'm sorry, bought an option, a put option up here, you'd have made a bundle all the way down here. Even if you got out right in here somewhere, you'd have made a nice profit. I mean, there's 200. If you go all the way to the bottom, it's almost 350, almost 400 points. 380 points. Of course, you're never going to get it all. In most cases, sometimes you'll get lucky and get a good bit of it, but you're never going to get it all. So don't be greedy and try to get it all and give it back. That's the other thing. So anyway, there's the daily chart. It looks just as bearish on the 2,000 tick chart. Very bearish day. Let's flip over there and take a look at that chart and go through the trades and wrap this one up. Wrap this one. And here it is. And it looked like we were going to have a repeat of yesterday with 2 legs down and then rally out of there, but we couldn't. This trend line held, and we had a big sell-off today. And, of course, we know why, because we turned down right off the big trend line of the daily chart. So right where we would expect prices to turn down if the trend line is going to hold. Does it mean we're going to get another big move down? Not necessarily, but if you're going to get one, that's where it's going to occur at. So we could go down steeply and hard from here. So be prepared. We'll see what tomorrow brings. That's the thing about the daily chart, is they're a lot slower to set up and develop, so we'll have to wait and see what happens. But big sell-off today for sure. Really from top to bottom. 55 point day. So several good trades in here. But let's zoom in, go through the trades. And let me show you this. You had one leg down, then you had this correction. And so look for a measured leg down, which we did. Then we got another correction. The same thing happened yesterday, except we continued to go higher, I believe, and closed higher. Well, today the trend line held, and we just went much lower, and we closed lower. And you can see that big move right off the, you already had this trend line established off these first 2 swings. And there's a setup right there off that key entry point. Second entry short. You might even call that a triple test, but it's a big bear. It broke higher and failed and turned down. Once it touched that trend line, you had double resistance right behind it there, and it was off to the races. And you'd have got a runner on this. Most likely got a runner, and you probably could have ridden this. You could have gotten, depending on how much risk you want to take. And I mean, I wouldn't probably have a problem riding out through that, because that's acceptance of prices and not rejection. So if you just got, let's just say you entered on the engulfing bar and you exited in the middle of that, you still got 6.5 points. So anyway, let's zoom in and talk about the trades. There was some news at 7:30 this morning, unemployment claims, high volatility, so you want to be flat. I'd probably just wait till after that. And we had an overshoot here, but we never really got a break. We did have a break way back here. A lot of times you'll see a break like that in the overnight, and it doesn't really affect the trend. It'll just continue on. So maybe because we had an overshoot, maybe the break counted, and then you got multiple legs up, but suddenly it just reversed, and there just really wasn't a good chance to get in this. Just a first entry either. I will say here there's a hidden second entry, but we already had a break of this khaki one in new low, so it's a little risky, especially with the channel still being in play. But there is a hidden second entry there, and I mean that's a 5-tick bar, very low risk. I mean the good thing lately is you can get in following the 8-tick rule in a lot of cases, so maybe you take that trade. Runs down, makes a new low, and then it heads back. And notice what happens here. It runs up. Notice you got that 2-bar matching low. That's just like a new low. So when it breaks lower right there, that's a new low. And then you got 2 legs up to a new high. So that's technically a second entry short. I don't know if the second entry would count that as a second entry or not, but it is. It's a little more advanced, a little more convoluted. I think it would count that. I didn't put it on here to see. But it doesn't matter. If you see there's easily a second entry right there, a nice signal bar right at the key entry point. You had your break and 2 legs up regardless of whether it was a second entry or not. I'm going short there, and look at it go. Great trade. All the way back down to the bottom of the range. Actually went further than where I originally had it, and you can see it does tend to fit in there, so I believe that's correct. Then we bounce. It tries to bounce, but instead it just goes sideways. And then you get a second entry short in the middle of the range here with plenty of room to the bottom. Right off another key entry point. And you got resistance right behind it as well. Look, 1, 2, 3 attempts. So you got the midline holding as resistance. You got the EMA holding as resistance. You got the trend line holding as resistance. You got multiple reasons. You got a second entry short. Go short right there. And you're just, as long as you got room to get out before here, go short. And you're just looking for a scalp, and that's all you would have got out of that one. But it runs across here, finally breaks out. Of course, most breakouts fail. But more importantly, you got a break of this and a new low. You got a break of this right here and a new low, 2 legs down. You're a little ways away from the EMA. You got a triple test right there, and you got that failed break lower. Odds are we'll probably at least come back and test this breakout again in the EMA. And if you got room there, maybe you take that trade. This is a little more aggressive. You're trying to pick bottoms here. Most of you shouldn't be trying to do that. I'm warning you. I'm telling you. This is for more advanced traders, but people won't listen. They'll try it anyway. Just learn the hard way or be good enough to do it. That's all I can tell you. Guarantee you tomorrow I'll get 5 emails, people trying to pick a bottom and wonder why they failed, and it won't look anything like this though. But that's very dangerous, so I'm telling you up front. But anyway, you get a first entry, second entry, and so there's a failure right there. It's not exactly, I mean, if it's reversing here, that's where you would expect to have one. It's not a perfect setup. It looks a little congested. We are getting back into the range. You would expect prices to come back up here. They've already touched down here before, and now they're just kind of working sideways. So it's still weak. So it's not a great time for a reversal, but look what happens. It takes off. So you never know. So maybe you take that one, and the trend just keeps going up. I don't see anything. You definitely wouldn't want to go long here. This one's very tempting. It's right into the key entry point though. It does push on through, so this wins out. So maybe we're going to get a reversal here. Runs up, and suddenly you get a break here, and you're just going sideways. You get a failed break higher. You can't go short yet, so just sit tight. It's tempting to maybe take this long because it was a second entry when it broke above this, but since they have matching lows, you could use this. If you have enough room back here, maybe you take that trade. And you could see that it was a measured move. And it actually tests it twice and gives you a second entry here, but the signal bar is not very good and it's congested. Otherwise, I might have marked that long. But it runs up, fails out the top, makes a new high, and gives you a big bearish bar. There's a hidden second entry. This is just the retest. I usually don't draw the trend line, but notice the move up, pull back, move up. So there's two legs up there. Big bearish bar, still room back to the M. I like going short there. It's a little aggressive. It's a little early. You're better to wait on a lower high or something else, something failure or something. Your lower high comes here. It's moved too far. It looks a little congested. But notice what happens. You get a first entry and then a second entry. And this actually breaks higher and fails. I don't think you want to go short here. You have already pushed through the support, but it's a really big bar, so you're taking on a lot of risk. 13 ticks. But if you wait for it to break higher there and then put your stop below that, then you're only risking the bar and whatever's above it. So maybe 5 or 6 ticks versus 13. So I like trading that one on the engulfing bar, and off it goes. And you would have got a runner here. Then it goes sideways again, breaks out. It's probably going to fail. We'll see if it confirms this, gives us a trend line here. I kind of already had drawn it here, but since it went higher, we drew it here. And you can see it looks like it confirms it and then, or touches it and then confirms it. But there's clearly a second entry right here, and it's clear that something's holding prices back. Really, you could treat this like a resistance and a failed breakout, and the channel has got a close outside new high, very bearish bar on the second entry. I like that one. And again, look where it takes off. Boom, key entry point. And look at it, just rockets off. That's where everything happens at the key entry points. Runs down here, bounces, or you get a close outside and it bounces some, comes. Notice when it went through the EMA, it usually will come back. It looks like it did kind of come back and test it there, but usually it'll give you a clear test before it goes on. And here it did come back and give you a clear test before it went lower. It's tempting to go short right there. It's a first entry. There's no break. This should probably be off of that bar. There's no break of that rally up through there. I'd wait on a lower high and a second entry or something. And guess what? You get a lower high plus a first entry, second entry here, and a fairly decent signal bar. And again, it came off a key entry point. This is a minor. An EMA or midline is a minor key entry point. You usually want to see it hold a few times or get a second entry off of it or a lower high or something. I usually won't take that first entry unless it's really, really bearish. But when you get a second entry like this, and you just go ahead and take it. And again, it takes off. Probably would have got a runner again. Runs all the way down, bounces off that low. All right, where are we expecting it to go now? At least back to the midline and probably back to the trend line. And you can see it just takes off here, and you start getting some short covering here. All these people that came in are taking profits. They don't want to give it back. And then once the profit taking is over, it can't even go higher again. It just moves sideways back to the key entry point. And this confirms it. And guess what? You got a little double bottom here, and you get a first entry, second entry, and you get a double top, and you probably could argue that to be a triple test across there. And it actually breaks higher and turns down again on the second entry. You can trade that on the engulfing bar. I don't know if I wait and go short down here. Same reason before. By the time you wait, it's 16 ticks. Where if you trade it on the engulfing bar, you're cutting it down to 9 or 10 ticks probably, or something of that nature. Plus you got all this. Look at the resistance behind you up here, protecting your stop. You got a double top, the trend line, and a proven trend line that you just confirmed. So that's good. You got lots of resistance behind you to protect your stop. And look at it go. Where did it turn down and take off again? The key entry point. Double key entry points. It just shoots right through here, comes back and tests it, notice how it comes back and tests it and then turns down, and then it just kind of works sideways. Notice the midline coming into play. I don't see anything in there you can take. There is a lower high here, but I think you need a better setup than that. I'd want to see it come back and test this. It does come back a second time here, but you're getting too far away from the EMA. You could treat that as a failure, and you could treat it as it's a confirmation of that trend line, but you just don't have much room here. I'd be real careful with that one. You do get a break, new low, and again, it can't really rally. It just goes sideways. That's usually a sign of a very weak market. Just goes sideways, comes back to the key entry point, the midline, the minor one, but it doesn't give you a setup really. I wouldn't trade this on the engulfing bar because that's a doji. And then you're just kind of chopping sideways here. I wouldn't try any longs yet. And it breaks out, fails. Again, I wouldn't try a long in here because this thing's been weak. And you do get this channel back up. You get a close outside, new high, lower high here, but that looks really congested. And then you get the failure. It breaks higher and fails and turns down. You could go short right there or go short on the engulfing bar and save yourself a tick or two. It actually tries to go higher again and fails and turns down, but by that time it really looks congested. I think it's you either got to wait for it to reset at the key entry point or just sit tight and see what happens. And of course it goes lower, but it didn't give you a setup there really. If you don't enter here, I don't think you can enter. And you might enter there just as a lower high because it gets back pretty close and it didn't move that far. But the thing I see is I clearly see two legs down and then only one leg up. So I want to see that failure there first. But maybe you take that. And once again, it just starts. We're still working lower here. There's actually, I didn't draw this. There's actually a secondary trend line right there. What color we'll make that? We'll just make it say. Runs down, it bounces there and just gives you a first entry. But does make a new low, and then now we're where we expect her to go, back to the key entry point. What does it do? It goes right back to the key entry point, gives you a perfect first entry, second entry, and off it goes again. Now, this one's a little tricky because there is still what looks like a trend channel, but notice how it's kind of odd looking. It's kind of hard to draw. I believe that you've got more sideways stuff here. And so to me, it's more like a failed breakout, but it's two legs up to confirm a key entry point with a very bearish bar. I'm taking that second entry in a big downtrend like this, and it's at the EMA as well. So you got a triple test, you got a second entry short off the key entry point, you got the EMA, you got the upper side of the trend channel, which you actually had an overshoot, if that's correct, it looks correct, and you got a failed breakout out of. I mean, you got so many reasons to go short there, you got to flip a coin to decide which one you want to consider. That's the kind of trade you want, multiple reasons, and look at it take off again. Where did it take off from? The key entry points, multiple ones. Doesn't go as far this time, and then we're chopping sideways. You get a failed breakout there, no real setup, and the next thing you know, you got a trend line working lower, and you get a new low here, first entry, second entry, right off another key entry point. Go short right there, and that takes us into 230. I mean, there's multiple second. I mean, these are some of these are easy setups. Nice trading day. Good trend. That's what you want, a good trend. But you want to watch those key entry points. So I hope all that made sense. Hopefully some of this stuff is coming together for some of you that maybe the last 2 days has been helpful. I hope it has. To get you on track, looking at the right things and looking for the correct things and trading the correct way. None of this reading the tea leaves, hocus pocus stuff. And again, don't worry too much about the bar by bar stuff. Not that you can't learn something from that. Don't get me wrong, but it's not what you need to be concentrating on. That's my opinion. I never really concentrate on it. I never think about it. The only time I'm looking at the bars when I'm waiting is the signal bar. It's the only bar I ever concentrate on. The rest of the time, I'm just looking at the big picture. I might be backed out just like this, waiting on it to come back. If we're trending right here, I'm just waiting on, if I'm sitting here watching this chart, I'm just waiting on that to get right here. When it gets right here, somewhere along in here, that's when I'll start worrying about it. And then next thing you know, you got a couple of bars. I don't care about those bars. They're meaningless. But then all of a sudden you get one that trades up, touches that key entry point, multiple key entry points, and turns straight down. That's the bar I'm interested in. That's the only one I'm watching. Now, there is a little congestion there, but this is a range, so you'd expect to get some congestion at the highs until it touches. It was really struggling to get up there. Once it touched it, though, boom. I'm probably going to enter right here, but you could enter right here, and then look what happens. Boom, off it goes. It doesn't get any easier than that. Doesn't get any easier than that. That's what you're looking for. And that's all you care about. That's the only bar I cared about right there. Now, I was going to look for congestion, but again, if you understand what's going on here, the reason it's finding congestion is because there's still a little buying coming in, but the selling is starting to overwhelm it. So you're not really selling off yet. Most people are waiting on it to touch that key entry point, most likely. And we hadn't quite gotten to either one of them yet. Notice that we haven't touched the range, the double top one or the range, and we hadn't touched that one. But as soon as it touches it to the tick, boom, it turns and sells off, and boom, there it goes. That's what you're waiting on. That's what you want to see. I mean, that right there is, I mean, that's the money shot right there. Here it is right here, the money shot. Here it is right here. This one's not as clear as the others because that's the first touch, but it's still clearly two legs up with a great signal bar way away from the EMA in a downtrend. Those are the ones that you wait for, the sure things. All right, I hope that was helpful. Hope the follow-up from yesterday with me reading that helped some too, to maybe tie up any loose ends, because there was a little bit more important information there than maybe I gave yesterday. I talked so much I don't even remember. And here we are, another 30-minute video again today. So anyway, I'm going to wrap it up. We'll be back next week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.